Hello, everyone, and welcome to another episode of the Stock Market Today video. It's Justin Nielsen here, and I'm going to be hosting in place of Allie, who is off in New York doing a few shows. So hopefully you can catch her on the Barron's Roundtable and earlier today on Barney. So let's get right to it. It is March, not March yet. February 28th, 2025. We're on the cusp of March, and helping break down the action that we saw this week is Mike Webster, our senior market strategist. How you doing, Mike?
Good, man. I'm tired after this week, man. This one wore me out completely.
It's been a week, yes.
Yeah.
So we've got a lot to talk about. So let's get right into it and start with the NASDAQ composite. I mean, gosh, it really kind of got ugly there. But you were kind of saying earlier this week that it seemed like a magnet for the 200-day moving average line. It seemed like we at least needed to test that, and I don't know that you could have a more perfect test of the 200-day line with the bounce and upside reversal that we got by the end of the day.
My God, this was just so kind of textbook of a balance. I mean, when some things are so like picture perfect, it almost spooks you a little bit. But this is what we were expecting. Like as you said, once we broke the marked low, the 119, 141, and then didn't bounce up the way we tried with SPY. So let's go to SPY because it had undercut um, a marked low, but then it got support and actually had what we call a pink rally day. So that was day one of a rally attempt. And of course, we're looking for a follow through day right now, a part of the system that Bill O'Neill came up with before we were both born. And really, when you're coming down in a correction or a bear market, you hit a low and you don't take action there. You wait until you get a follow through day, which is typically on your fourth or after day from that day one rally day, which that pink day would have been day one, um, unless you undercut the low of your day of that rally attempt, which you did yesterday. So that killed that rally attempt on SPY. But Nasdaq never had a rally attempt. Let's go back there. This is a little bit of it's a little tricky this week. So on that day where you had a pink rally day on SPY, you had a very weak acting day on NASDAQ because when you undercut a marked low in a healthy market, you should immediately bounce right back up above it. It's just like a shakeout zone. And because you didn't do that, and then the following day wasn't, anything to write home about, even though it was a blue day, which was technically day one of that rally attempt, that then died yesterday when we undercut that low. So then we were just kind of in no man's land. But as I said on that day that we broke the 19141, it felt like a magnet for the 200 day. Like that's where it needed to go to kind of resolve itself. So kind of just like a story or a song where you're like with a song, there's a part where it resolves itself, and you just hear it. You're waiting for that resolution. You can just think of it as like the chorus or something. Let's just think of it that way. That it's just normal and natural. So this was normal and natural. It does not mean that we go up from here, but the bulls stepped up big time today, supporting it there. And there was some negative news midday that kind of threw things off. That President Zelensky was at the Oval Office with President Trump, and I watched the full thing, and there was some fireworks there, and that kind of seemed like it was impacting the market. After we were originally trying to bounce, and then that happened, and then we started coming down again, but then we firmed up by the end of the day, which is great because if the market can digest what is perceived as negative news quickly and then move back up in the other direction, that's a big deal. So today becomes day one of a rally attempt, just to be
Right.
clear. So we cannot.
So yeah, again, and I just want to reiterate that because there's a lot of questions in the YouTube channel that I'm seeing, people asking, is this a follow through day? No, this is only day one. You don't start looking for the follow through day until at least day 4.
Exactly. And just for people who are new, it's only trading days, so we don't count weekends. So you're looking at late next week at the earliest, before, on day 4. So today's day 1, Monday's day 2, Tuesday's day 3. So Wednesday or afterwards is when you can have it. It doesn't mean on the fourth day you do anything. On the fourth day, you're looking for that follow on move. And the reason why Bill came up with this is because he recognized that as you're coming down in a corrective phase or in a bear market, he really built this over bear markets, that you get a lot of these blips. Like
Mhm.
you've studied it to death when with your master Excel file. Why don't you talk about the where your biggest up days happen?
Yes. I mean, if we just want to use some of the biggest uh, uh, up days recently, we can go to, COVID. Now, you had some days in here that were phenomenal. This right here, if I can get it, this was a 4.5% move up for the day. This was almost a 5% move up for the day. This was a 9.4% move up for the day, but this is all happening in this major downtrend. So yes, okay, if you were out, you could have said, yes, I missed this 9.4% day, but then that's not so bad when you get a day the next day down 12%. So again, a lot of times when you're looking at the biggest up days, you get, they're surrounded by horrible action. Now, to your point, the reason why we kind of use that day 4, the way that I always look at it is you have your starting point, and the only way you can create a line, right, is you need 2 points. So day 1, or the low of the rally, becomes 1 point, and then your follow through day is your confirmation. That becomes your next point, and that's what kind of gives you the uptrend. You need that line, going up, and the follow through day really kind of gives you that, that second point for yourself.
Yeah, I like the way you explain that. Excellent, excellent. Don't change the date yet.
Oh,
One-
sorry.
yeah,
I'll go
let's
back.
just go back there for a second. One thing I would like people to always focus on is that the green line, your 21 day exponential moving average on there. So there's pros and cons to it, right? The con is that by the time you're back above it, you're way off your lows. So if you're the type of person who likes to buy the lows, well, you can't really use the 21 day as your first signal. It can be a confirmation signal, like the follow through is a confirmation of your rally um, continuing. But what I like to look at is for your low to be above your 21 day for at least 3 consecutive days, and then closing up on those days. So for chart school, the three of us, me, you, and Charles Harris, we put it at 5 days. But I think when you and I get a chance to revisit those, we'll probably modify it and have a 3 day rule in there. So by the time that your low is above that 21 day for 3 days and you close up, you're well off the lows, but you also didn't get hit with as many of the false signals that lots of follow throughs don't work. We always act on them, but before you really start pressing the gas on here. But let's just go through on this first bounce of the 200 day, which is kind of similar to what
And I
we
just
have.
want to point out,
Yeah.
for exactly what you were saying with the 21 day, as bad as the news was and everything else, with COVID, we did get on the NASDAQ the follow through day on this April 6th. At the same time, it was going above that 21-day moving average line. So, you could have done action there. And then, as you said, it had 3 days with the low above, and it was really off to the races. But more importantly, you also had merchandise to be buying at that time. So, switching back to the current market, here we are with the support at the 200-day moving average line. We've got a ways to go to the 21-day line, but it wouldn't be bad to kind of see us, you know, con, you know, kind of rejuvenate ourselves, I guess. Kind of take a break here after a lot of really ugly action.
Yeah. So you want to kind of know what would be normal and natural in the very short term and then in the intermediate term. So in the very short term, yeah, because of the way today happened, a big spread, upside reversal, closing at the highs, going into a weekend, you would expect some follow on Monday. Like it would be normal and natural for it to now it feels like it's a magnet for 19,000 on NASDAQ. Like if that didn't happen, that would feel weak on Monday. Doesn't mean that we close up on Monday, but at least traveling through 19,000 on at some point on Monday. Like an inside day on Monday would be very unusually weak action. So you just want to know what's normal and natural. Like going back to the 2020. Let's just go back there because it was such a good example, and I didn't know we were going to talk about that one today. But on your first attempted bounce at the 200 day, you that was normal and natural. That very next day, you had a big, powerful move up. Then you had a downside reversal on day three, and then you had a big, up day on day four. Like that's how markets normally resolve themselves, and it should have been back off to the races. But you had this one-time event with this COVID that was going on, and when you get news that's that powerful, it is going to ruin charts. But if you just went to that day, 3, 4, how much were we up on that day? So, yeah,
3.85.
yeah. So we didn't have the volume there, for those who use volume. So it wasn't a traditional follow through day because on a follow through day, the theory is that the volume should be higher than the prior day, not above average, but higher than the prior day. So it wasn't an official one there because the volume dried up. But if that wasn't the case, that would have been a follow through day. You would have wanted it to be above the high from the day before for it to be a good one. But still, that's what you would be looking for. Then when it starts rolling, you know that once you undercut that low, like you better back away quickly if you're not already out of the market. So now we can go back to with this fresh in your mind, we can go back to our current market and see, okay, what would be normal? A big up day on Monday, or at least some action up on Monday. Tuesday, it's really kind of irrelevant, could be anything else. And then on Wednesday or after, having some follow on, we would want a decent spread, closing near your highs. Ideally, for those who like to look at volume, a pickup in volume over your prior day. That would be normal and natural. You probably won't be at your 21 day at that point because it's so far away. How far away are we from it now?
Right now, we are about 3% below it.
Okay, well, yeah, we could get up close
Yeah,
to it.
I could do
Yeah,
it depending on how strong, the days are. But it almost, I mean, if it's too strong, then that's
I
almost a
know.
concern in itself.
Yeah, so exactly, and that's why the two of us we've looked at every follow through day in history on the Nasdaq in detail, and after a while you kind of get to know what normal and natural is, and that's what I would suggest people at least go through the market over the last few years to get in your mind what a follow through day would be. They don't all work, so there's ways that we'll talk about on following SMT videos and on IBD Live of what to look for. But first, we have to get one because who
Yeah.
knows? The news could be so bad over the weekend that we just go through today's low. Then there's like look out below because once you break the 200 day, the next thing would be SPY hitting the 200. If we could go over to SPY for a second, that that is looked at by more people in the industry than the Nasdaq. So we're not out of the woods. We just have one day up. It was a convincingly strong day one, certainly better than our pink rally day we had earlier this week. Plus, you had it on some negative news, which makes it actually better. But this could, if we roll, expect at least a test of the 200 day. And if we can't hold the 200 day, we could be dealing with some serious problems. So
Mhm.
you got to
And,
take it one day at a time.
yeah, and you brought up news, there's a lot of news that can come out over the next week or two, even over the weekend, between tariffs and a lot of other things that have added some uncertainty to the market. That again, that's why we try not to give any targets of, okay, this is where we think the market's going to be in 3 weeks or anything. We just have to take it day by day and say, this is where we're at now, and kind of say, okay, well, if it does get support here, this is what that could look like. But just like we saw earlier this week, okay, day one of a rally didn't matter because we didn't have a follow through day. We quickly undercut it. You just don't want to be getting in real heavy when you don't have that confirmation.
Yeah. So I was just thinking, what a good exercise or homework assignment for folks to do would be just go from the top of let's go to a monthly chart for a second and go to that top there in 21 and whatever the date that, yeah, from wherever that is down to the bottom, go through on a daily basis, both on SPY and on NASDAQ, or you can just pick one, pick your favorite, and look for all the follow throughs and how they handle themselves and really focus on the follow through days when they fail and go back and start looking for clues of early signs of that failure so you can start backing away. And the one thing that you and I and Charles came up with was if you close underneath the low of your follow through day, that they almost always end up ultimately completely failing. And so that's something to be um, to be studying as you go through this exercise. Yeah, it's as simple as what
Yeah, you
Justin
just
is doing right
yeah,
now.
hit the arrow, you do it one at a time, and, pause every now and then after, an ugly break like this and start looking and saying, "Okay, this would be, oh, this would be day 1," and then it fails. "Oh, this would be day 1. Does this one hold? Where would the follow-through day be?" And, yeah, it's a good exercise to kinda get you used to, what it is that you have to look for, so that you recognize it when it happens.
Yeah, and so for people who've never looked at it, the follow through day itself, did not the rally day, but the follow through day itself, you want a decent gain on there, and typically that's either 1% or one and a quarter, just depending on the volatility of the market. And for an orthodox one, you want the volume higher than the prior day, but there are really no rules on the rally day if it's an up day. It's just if it's up at all, that's day one. If it's a pink rally day, meaning it's down on the day. It just needs to close in the upper half.
Mhm. Should we look at some of the sectors for today and
Yeah,
kind
we
of
could. Whatever
get a
you
sense of
want, man.
those?
You
Um,
drive the ship.
so I'm going to go ahead and I'm going to pull up, some of the sectors that we typically look at, and I know you like to look at the weakest first. So I'll sort these. Do you want it for the day or do you want it for the week?
The day, please, if you don't mind.
No problem. So we'll go with the weakest first. Oh, you know what? Didn't mean to have that in there. So real estate is, I mean, it was still up, but this is just happened to be the weakest for today.
Yeah, and that's a good sign too. When your weakest group is up,
Hmm.
that's a good day. Yeah, that looks fine actually. RS line
Then we
is
have
permanent.
our materials, which below the 200-day moving average line. Um, so kind of in no man's land. I mean, right here between the 200 and the 50. But relative strength improving.
Yeah, I'll let you play through these. If I have anything to say, say it.
Perfect.
You could
Well, I know
trickle
you're going
through.
to want to stop at RSP because this is the equal weighted S&P 500, and probably worth spending a little bit of time here to show what the average S&P 500 stock is doing when you take away that market cap weighting.
Yeah, this one we would have added to Swing Trader, but it was just late in the day because it did exactly what we had wanted it to do. It undercut the earlier part of that cup with handle, the 177.70, had an upside reversal, closed back above your 50 day, and we just frankly ran out of time to we don't like doing things in the last 15 minutes if we can help it. And but this looks really good. So it's just an ETF. What's the big deal? Well, this is the breadth of the market. This is how I like to look at the breadth of the market. And so it's your average stock. So your average stock has formed a cup with handle and had a shakeout in there with an upside reversal. Like this is textbook good. Does not mean that lots of times I'll say things are picture perfect. Doesn't mean that it's going to work out, but you need to know what to look for, what's a touch of gray, and what is picture perfect. And this is really good. It would have been nicer to get above yesterday's high or even above the 21 day, but kind of ran out of time in the day the way things were kind of just building at the tail end. So this is really good. But more importantly, what it does is it gives you that line in the sand that Justin drew. If it goes underneath that, that's abnormally weak. It's not picture perfect. That's a
Mhm.
trip down to the 200. So
Yeah.
upside reversals are your friend.
Yeah, and it's also worth mentioning that as opposed to what we saw in the Nasdaq, I mean, this is almost already at its 21-day moving average line, got back above its 50-day moving average line. And when you consider that that's kind of what the average stock on the S&P 500 is looking like, that's pretty encouraging. Same way, QQEW, not nearly as weak as the NASDAQ, not yet to the 200-day moving average line, still having that reversal, but not as weak as the NASDAQ. So again, some of the heavier market cap weighted stocks are dragging those indexes down a little bit more than what you're seeing with the average stock. Anything to add on this one?
Nope.
Okay, and then XLV Healthcare back above its 200-day moving average line. Nice boost of relative strength lately. Makes sense because this tends to be a little bit more of a defensive play. I bet this one's been, of course, Bitcoin getting a little bit of a hit. You see relative strength going down. Nice to see the upside reversal, but we'll see if the relative strength comes back because, it's been weak lately. XLK in the tech, this did go below its 200-day moving average line. Got the reversal, right here at 220, which, you can kind of see was an area back here in October. But again, this is kind of dominated by, two big tech heavyweights with NVIDIA and Microsoft. So it remains to be seen if those can kind of rally a little bit, because I think they're about a 40% weighting in the XLK. XLP, another one that's been really strong relative strength wise because of the defensive nature. People go to consumer staples when markets are looking rough. And so, again, it was up today, but the real power has been as the market has come down, how this has held up better and gone up as people go for a flight to safety, especially institutions that have to remain invested. XLI, it came up to its 50-day moving average line, just crossed above it. Didn't come down to the 200-day moving average line, but still, you'd like to see this relative strength line continue to show some power here. It got above its moving average lines, broke this downtrend. You'd like to see that relative strength line kind of confirm here. XLC, this is definitely, one of the big ones here is Meta, which we've been saying has been looking really interesting. I do have a position in Meta myself, but XLC, kind of nice that got support right there at its 50-day moving average line and at a round number of 100, kind of coinciding there. So not a bad looking chart there. XLU, the utilities, a little bit kind of middling, haven't really done much in the relative strength field. Usually these do a little bit better as defensive plays, but with so many of the AI stocks getting hit and some of these utilities being AI adjacent, that may have been kind of a shift this time. So you're not seeing nearly the strength in this as you saw in XLP. Energy, still a lot of kind of slop here in my eyes. Just not really finding much of a trend. Nice that it's back above its 200-day moving average line, but really need to see that relative strength get better. SPY, we already covered, looking good there, as is the Qs with that support right after undercutting 499.70 and then coming right back above 500. So nice to see that. It didn't come down to the 200-day moving average line in this case, like the NASDAQ, but again, did challenge this area of support. XLY in the consumer discretionary area, of course, Tesla and Amazon, two big components here. Nice to see that get support. Kind of over here by its November area is kind of what I'm looking at in terms of the support level after breaking this 218.30. So interesting there, but relative strength still a little poor on this one. And then chips, they've just been a little bit damaged lately. So again, good to see the upside reversal, but relative strength still poor. We're going to need to see this kind of right itself in a big way in order for, I think, us to be enticed into the chip space. XLF has been looking really strong relative strength wise as this cup with handle formed. This was kind of showing a lot of strength, and today it was one of the top groups. So relative strength continuing into new high ground for the financials.
I'd say that's the best looking one out there. Now, The risk to it is that lots of times when the market has been going through a corrective phase, as we've been going through, especially on the NASDAQ, that when that lifts, as we were doing today, the stuff that had been holding up or even advancing then tends to pause or sell off while you've got a mean reversion trade going on with the other stuff. So that would be the only negative against it, but I think it looks solid.
And we can talk about a few stocks now.
Sure.
One that was almost on the list was Berkshire Hathaway, one of the components, the largest components in the XLF. But let's go ahead and shift over to TradeWeb in terms of individual stocks. This was our stock of the day today, and kind of just was skirting right there at the 50-day moving average line. Again, one of those that had a really strong relative strength lately. Give us your thoughts on this one coming out, or I guess coming above this 135.51 level in this flat base.
Yeah, so this is one that Ed Carson, our good friend, mentioned this morning for the stock of the day, and so I was looking at it, and I wanted things for today that were in case the market rolls on Monday, and I didn't want to put a bunch of focus on a bunch of heat here. So the downside, like I said, is if NASA keeps ripping, these slow pokey things might not, like TradeWeb, might not end up working. But this is set up nicely. And how deep is this base?
Oh, it's only like 14%.
Yeah, that's really nice. And how deep was the last one? Probably even tighter.
Yeah,
Yeah,
8%.
so typically you want to see your most recent base tighter than your prior base. Well, not typically, you always do. So that's a negative against it. But you look at it and then there's a context there. It's like it's only 14% deep, but certainly some of the bars in there are a little bit wider this time than last time. So that's more price discovery, and it's telling you it's not as much as at an equilibrium level as it was last time. So what it has going against it was that it tried to break out at the 141.69. I didn't get a chance to look at the news to see why that got turned away there. But now as you mentioned, you're just coming out of this base. It's still in an actual area. Now, obviously, the 141.69 is your standard pivot, but I would really say that your 135.51 is the pivot that I would be using for this, because that's your alternative pivot within this structure. So it looks good. Let's go to the weekly and look at the quarterly numbers, because I was surprised with some of the sales numbers that I saw that were so steady. So I don't know what was going on here, if there was some sort of merger or something. I just didn't get a chance to look into the news, but going from 5 and 6%, quarter over quarter to double digits and solid double digits. I would look into that just to understand why. Like, because that's not normal. That type of pickup. So there's got to be a reason why. Could be neutral, could be negative, could be positive. You get a little deceleration in your earnings down to 19%. So that's a little bit of a red flag. So it's not perfect, but we did undercut the lows of the prior base, so that reset the base count. So it has a lot of good things going for it, and of course you can see that kind of that stable earnings line. So this is a slow pokey stock if you're looking to get exposure, but you just don't want to go into the heat.
Mhm.
This is a place that I would do it, but I wouldn't do it with any big size, frankly.
Yeah, we were doing a lot of half positions in terms of individual stocks on Swing Trader today, doing a few full positions only for ETFs. But also, if you kind of just and even if you take a look at many of the stocks that we'll talk about today, this has an ATR of 2.41, the 21-day ATR percentage. So that is on the lower side. Kind of I consider like below 3 on the lower side. And yeah, TradeWeb fits the bill in that regard, 2.41.
Absolutely.
Let's go ahead and go to another one, Nutanix. NTNX. This had a breakout on earnings, nice gap up. So very different looking when you have a stock like this that is up at highs while the market has been kind of turning ugly. So what do you think here?
It's just luck, really, with this. I don't have a position in it, but that this stock being in this position um, is luck because it happened to report good numbers as the market was falling apart. So sometimes there's this disconnect from what your stock is going to do. It's going to be specific to the news of that name, and that's what happened here. So it put it in a different position. So it's not, you don't have that mean reversion trade with some of the other stocks that have sold off. So let's look at Palantir, for example. That
Palantir was actually the subject of my column this week.
Oh, was it?
We had this on Swing Trader. We took a nice little quick gain on this. We actually took just a little bit over a week. Took our gain on this. We missed out on this 5% move here, but guess what? We also missed out on this huge downturn right there because we were taking that profit into strength. So really avoided a lot of this. And for a stock that, at the end of the day, basically was flat for the month, we got a nice 10% plus gain out of this one.
Yeah, and the reason why we were taking that off into that strength rather than waiting, what we tend to do as swing trader is sell some into offensively as you're up a half an ATR to an ATR, and then the second half of the trade we do defensively. But this one, because we were pushing it, buying it where we did post earnings, we realized we were playing with fire, and we wanted to just lock it in while we had it because what happened there is normal and natural. Like, you go to the weekly, when you have a stock that runs like this, it's gonna pull back in, and when it pulls back in, it's not gonna be nice and gentle. It's gonna come in hard, and it's how does it do it? It did this, and it stopped at the 10-week or in and around the 10-week. So, like, I'm not buying this stock right now, or putting it on Swing Trade. I shut down my own accounts. Maybe I did a shotgun trade into this one. I don't think I did, but this is not where you normally buy a stock
Right.
because let's go back to the daily. There was so much damage in the short term. Yes, you had an upside reversal, and yes, this should bounce up to maybe 100 or so, but then it needs time to resolve itself to be normal and natural. Versus the Nutanix, if we go back to that one, this was in a different position because of where that news came out. Now you have today's, and again, if we had another half an hour or an hour left in the trading today, we probably would have put this on Swing Trader using today's low as your stop because it's gone back through your standard pivot, the 75.80, the left side high of this cup, and you have a good place for a stop, which is today's low. Now, it doesn't mean that it won't trigger that and then doodle around and then go higher. But if you're swing trading this one, that's how you would handle it. And, I think it looks good. Now, on the weekly, the fundamentals aren't that good. So let's just glance over there for a sec and just go down to the quarterly numbers. For a software company, you should have sales growth a lot higher than in the teens. So that is certainly a negative against it. And you can see with that earnings line, the angle of it, again, for a software stock, that's a negative. The other thing that's a negative is that bad break that you had in there in the June 24 quarter. And if you look historically, this stock has had several bad breaks over its history. So that means if you're going to trade it, I would trade it with a smaller size. I think it's up high enough from those bad breaks that you don't have to be concerned with them. But it's in its nature. So you look at any of those bad breaks, and certainly, if you were to trade it, I would do it on a daily basis and see how bad those were, and just expect that, okay, if it went down 15% in one day before, it can do it again. So stocks kind of have characters.
And you do have a higher ATR on this one. As we mentioned, TradeWeb was at 2.41. This is at 3.51. Certainly I'm sure this day is, upping the average a little bit for the 21 day, but still, 3.5, now we're kind of getting up there into kind of the mid range of volatility. And then let's go ahead and end on the stock note with on the higher end of the volatility. This is Carpenter Technology, CRS, which has a 5.2 ATR. So something that's moving around a little bit more, but nice support right there at the 21-day moving average line. What are your thoughts?
Yeah, it's really a nice position here. I know Pattern Rec isn't picking it up as a cup with handle because it's too short, but it is a cup with handle in my eyes, or a cup with handle in spirit. And it's gone through an alternative pivot today, just barely. So this is where it should move up. Now, anything in this area is going to be subject to news, of course. So, if the news is big enough, it's going to push it one way or another, regardless of what the chart is set up for. But this is set up to break out above its standard pivot, which would be the high from last week. And what's also nice is it was able to recover back above that Livermore number of 200. And let's go to the weekly and just glance at the quarterly numbers. Um, on here. And of course, you're in a more cyclical type of area. So you've got big numbers, 95%, but that's down from 97, down from 133, down from 213. So it's kind of that more cyclical nature. And so in those cases, I like to focus on the sales, and the sales are kind of mediocre at best, really. They're all over the place. So again, lower lower quality, and I wouldn't build a big position in this one. So all three of these are kind of mediocre names, just being honest. And so I wouldn't build any big positions in any of them.
But this is where you maybe do some probing positions, a
Mhm.
little bit smaller, see if you get some traction. Also worth mentioning that CRS, at least, over the last year, basically, has had this tendency to really kind of just come down to its 10-week moving average line and get support. Of course, that won't last forever, but that's been the personality of this stock. So worth looking at that. Mike, do you want to go through some of
Yeah.
your charts? You have your Webby RSI, which again, there's not going to be much to look at there, right now. That's Webby's real simple indicator. But you always like to start with your, overview of where we're at. So take it away.
Okay. Let me get into here. Most stressful time of my week. Can you see SPY on a weekly?
Yep.
Okay. So this is our Bob Weir. Take a step back, look at the weekly chart and see what we see. Notice, is there anything unique? Is there anything really bullish or bearish? And so we're focusing in on this last bar, or candle. So let's blow this up a bit. What's really nice about it is this huge wick at the bottom. It's hard to see probably from down here all the way up to here is where it traded, and that's a huge deal. And it did it over here as well. But the body, which is the candle portion of it, the pink part, was a lot bigger than what we have right now. So when you have your body, the pink part, being a lot smaller than your wick, it really gives you a lot of evidence that you kind of cleaned out. It's kind of a capitulation type of action. Would have been nicer to close up here, so we would have had a blue bar, but the pink bar is telling us that we closed underneath where we opened, but still on balance, um, more positive than negative, frankly, even though we were off a bit. And let's go over to the NASDAQ. Not as pretty. Not as pretty at all, because look at how wide this body is, and it's still wider than your bottom wick down here. But you did have a decent bottom wick, and it did shake out underneath all of this stuff. But just being intellectually honest and just looking at the weekly bar itself, that's not a good look. But that's also why we look at everything else. We do the whole mosaic thing here. So we're going to go over and do our regression stuff. Now, this is not an official regression line because it was too short, and we were starting it here on January 13th, and we were ending it on the 21st of February. But then it broke down below it, and so I just kind of stopped it there. So this is dead, and I'm going to remove this for next week. But I just wanted to show you, if we continued on here, it would, to today, it kind of gives you this false sense of where our channel was. This isn't really how we traded, because we had all these bad days down here and these bad days down here. And that's why we like to do this over a 50-day time frame. Let's show you the same thing on NASDAQ. Again, we were starting on this low over here on January 13th and ending it on the 21st of February. This one is even more interesting. If we bring this out day by day, all the way out to today, it shows we're in a decline
Right.
during this time frame. So that's why we can't use it unless you get something like we had over here, where you get 50 days or more and really in a logical trend.
Mhm.
So we'll move over to the
And
50.
so just I know a lot of times you'll use the low, or if we get a follow through day, that might be where you might start one.
Mhm.
But as you said, you're going to want to see some amount of time, more than more than just 3 days. Again, this gets back to our earlier point of, in order to make a line, you need 2 points, and ideally they have some distance between them.
Yeah. So with a regression, good question. With a regression line, I like to have at least 25 days. It depends on how the data falls. Like if it's clearly giving you a sense that it's in a trend, I can use fewer days. But if you're not sure, like if it's gray at all, then go out to the full 50 days, not 51 days, not 51 and a half days, not 49 days, 50 days. And just, you got to pick a level if you want to pick 47 days, go with that. But then always go with that. Find a standard and keep to it. There's nothing magical about 50 days, but it's what I picked because we use it in so many things. We're used to it, 10 weeks long. Um, so with this, when we're starting it out, I'm going to be using today. Let's assume we hold today's low. I will use today's low as day one of this, and then we'll go out 25 calendar or 25 trading days minimum before we put this line back on again and see.
Mhm.
And really, the more the better. I mean, once you get to 35, 40 days, yeah, that's probably going to be enough. But yeah, I'm a little OCD, so I like to stick with 50. Um,
Okay, moving on.
okay, so we're going to go with the 50% retracement to kind of see where we're at there. I've left the same ones on there for a while. So going back to the December 6th high and the January 13th low, we poked above it for a while. Now we went back below it, and we just were able to get back above it, the 592.21 midpoint by today's close. We really want to live above it to feel comfortable. So now NASDAQ, completely different picture here. The December 16th high and the same January 13th low. Well, we fell out of that range this week. And so that's really damaged. Now we have this new potential rally, but just being honest, like that's not good action. That's the complete opposite of what you want to see, which kind of brings us into our levels. And I haven't changed these levels on here since last week. And so we'll notice that since last week on SPY, we undercut this 590.93 area. Now we were able to get back above it, but that is, that's concerning. That's not what you want to see. But let's go over to the Nasdaq, which is little bit more of a concern. Is you blew through all of them that I had on here, even your solid, line in the sand that we had from last week, which was your low from January 13th. We blew through that. That's why we were getting so cautious. And you blew through all of these other levels. So now we're going to just leave these levels on here for now. We'll add another one for today's low, but we'll leave these on and in hopes to start, ticking back through each one of those. We'll end these charts with just looking at the 21 day. I like, kind of having a bunch of lines on there and then taking them all away and just looking at it from a very clean, purist standpoint The blue line is a 21-day exponential, and our high has been underneath that for several days in a row. That's not what we'd like to see. You and I, with Chuck, studied that in great detail with the market school rules, and it is a big deal to be underneath there. The only difference is when you close up, on the day, which we did today. That's not really a negative because you're moving back towards your goal to at least start trading through that level. Let's look at it on the composite. Oh, and I think I failed to mention that I have some SPY related things. I wanted to
Mhm.
do Qs. I had Qs in my own account, but I sold those so we could put it on Swing Trader. I haven't had a chance to buy those back yet. So Nasdaq here, we're well away from this, so we want to get back up to that as soon as possible. I'm going to stop sharing on this one and go over to the Webby RSI that you had mentioned. Um,
And for those that aren't aware, that just stands for real simple indicator, not relative strength indicator. And it's just a measure of where things are at in relation to the 21-day moving average line, which right now we're below it, right?
Exactly. So this is measured in ATRs over here on the right side. We'll just blow this up a little bit. And so when your low is above it, you'll see it in blue. When your high is underneath it, you'll see it here in this kind of burnt orange color here. And I use that for a reason, and we'll see this in a second. But again, this is what you want to see is a wall of blue, like we did back here in 23 or in 24. And these periods of time where you're trending above it. So let's look at Nasdaq, and another reason why I'm on more on the bullish side of things in the short term, or hopeful, I'll say it that way, is that we got to a point where, and I don't want to use the word oversold because that's a dangerous word, but I know that that's how people would relate to it. Is when you get to these extreme levels where the market wants to do a mean reversion, like go back to normal. This is how I like to measure it. So your histogram here, this burnt orange one, really poked up higher than it's been for anything back until over here. And what happened back here on August 5th? You got this extreme reading because your high was so far away from your 21-day that it was 3.5 ATRs away from it. And we had Eric on
Eric
IBD Live,
Kroll. Yeah.
Eric Kroll on IBD Live today talking about that day, and he had some really cool rules around that he likes to use. And so this is my version of that because I like to keep things a little bit on the simpler side. And if you just see that you've got this extreme, now it can extreme can get more extreme, and that's why Bill
Yeah.
O'Neill hated the term oversold, because oversold a little bit can turn into oversold a little bit more and a little bit more, and before you know it, man, you're in 1987 territory. And
Mhm.
like anyone who did the oversold game in a big way down there during that time frame, um, that was probably the last time they did it. So you want to be careful with these, but you will also want to know what's normal and natural. And what's normal is natural is when you get these spikes, for the market to at least do a mean reversion um, back up. And it doesn't mean that we trend higher, but it just at least get us back up to the 21-day, and then we can deal with that a little bit better. And we'll just go over to our Bob Marley charts real quick, and let's just go start with SPY. Here we're getting into the yellow territory. This is our low in terms of ATR, so versus our high. So we're more than 4 ATRs off our high, which is not a good thing. We want to get back up into the twos or the threes, which would push us up over there.
And it looks like
Um,
that's what we did before. Again, we've tested those areas a few times since December 18th, but we haven't stayed down there for long.
Exactly. So you're always looking for, like, where did it trade before? Like over here was starting to get like 3 ATRs off, and it would kind of stop there. And then here on the December 18th that you're talking about, that's where it blew through it and then kind of stabilized. And then we were getting up here, which was healthy. Like that was a good level. on here and we want to get back up there. And let's just, why don't we go over to NASDAQ? On this one, we've blown through any areas on here and we're deep into the yellow territory. And hopefully this becomes a place where we stop. We're going to keep an open mind.
So one of the things that you and I were working on, don't have time to get to it right now, and we're still kind of in process. We were working on some precedents for the action. Again, really studying that bad break, and you've already shared a lot of those. Maybe we do some work, some more work on that, and give some tweets out so folks have some homework to do.
Yeah. So what I would say is the easiest thing to do. I mean, I do have a YouTube on it. It was my first of my series of my Webby Rambles on Slight Return um, YouTube series, a podcast really, of going through different things. Was going over that homework assignment from the December 18th. So it was the first episode, and you can follow that. Go on YouTube on my channel Webby 5150 and watch that and go through those examples, or what you can do the simplest way is just pull up the NASDAQ. Let's do this right now, real quickly. If you don't mind pulling up the NASDAQ on a daily. And what you want to do at home for the weekend is just to look at every time we come down and touch the 200-day, which is your black line. And that's what we did today. And go and see at the point that it touched it. So look on that August 5th that we were talking about before. So when you touch it, what happened afterwards, but also what happened beforehand, and how did that look versus what we just went through. And then, okay, the 3 waves down that we had back in 23, that one was a little bit abnormal. It broke through it. And then that next day gave you that head fake, it closed at the lows. Your expectation at that point is for it to go lower. And even the next day, where you marked there, sure, it was up on the day, but that's nothing to write home about. I mean, if you're being intellectually honest, you closed at the lows, you found resistance at your 200, it looks terrible. And the next day looks a little bit better. But again, focus on your follow through days. Look for when you get above your 21 day for the first time. And then when your low is above it for 3 consecutive days and you close up on it, make mental note of those and just go back and do this each year. If I would do it on NASDAQ, I would do it on SPY. What were some of the dates? I think 2014 was one that I wanted to look at.
Right. Well, and again, we can't probably go too much into detail.
Well, this will be the last one we do, because I know we're over time. I think it was in.
I've got charts to work on, so we have the IVD 50 out.
So in that April time frame where it came down, the 39.46 over to the left.
Oh yeah.
Yeah. At that point, I would study that one because that is the one that is, looks more like our current one. And that's your homework for the weekend. I forgot we've got newspaper to produce, and you're a big part of that. So we can call it a day. But I hope everyone has a good weekend.
Yeah, so it was again quite a month, down for this month. But again, if you were taking some of those profits and sidestepping when things really got ugly here, I think you could have saved yourself a lot of heartache. So hopefully that's something that we can help you do in the future as you are continuing to watch these Stock Market Today videos that we put on. Also, I had Viva Jha on the podcast. Really, really great lady. She was talking about her TQQQ strategy. It'll be interesting to see because it undercut a level that she was looking at. It'll be interesting to see if she got out or if she got back in. So that's up there. And of course, we are also on in the mornings on our IBD live show. If you haven't checked that out, take a trial at www.investors.com/IBD live. Webby's on there. 2-3 times a week. I'm on there a couple times a week.
Every Monday, Wednesday, and Friday. My favorite time of the day.
Yeah, and we have David Ryan on Tuesdays, 3-time U.S. investing champion. And as Mike mentioned, a lot of special guests. Eric Kroll was the guest today, but we've got a lot of great guests that we've had on too. So you can join us for that 10 minutes before the market open. And we usually go at least 90 minutes into the trading day. So Mike, thank you so much for your wisdom here and your insight on all of these different precedents. And again, that normal, natural feel. And we will see you next week. And for everyone else, thanks a lot for watching. Take care now.